What's going on, everybody? Welcome back to another weekly market update where we come out with these videos every single week where we predict the market quite accurately. If you guys remember last week's video, we talked about a potential strong Monday to Wednesday green days and then Thursday, Friday selling off. And go check the tape what exactly happened. We saw some terrible selling off Thursday, Friday, and we had a pretty decently bullish Monday through Wednesday. So what do we think is going to be happening next? If you don't know what's going to be happening next, make sure you tune through the whole video. Also, make sure you hit the subscribe button, like button, and watch the rest of the videos. If you want to learn more about the stock market, the crypto market, or trade live with me every single day, check out our premium Discord. The links will be down below. But let's get straight into the chart. First, I want to start with the weekly S&P 500 chart. And what I'm going to be looking at here, I'm looking at Elliott wave count, starting from the 2008 bottom here, or 2009 bottom, where we saw the zero. What I think is going to be leaving is going to be a 5 count to the upside before we see a bear market. I think currently we are in that fifth wave. I don't think that fifth wave is completed. I think that fifth wave has room to about 500 to 520. So that's where I think the market top will be. I just make that clear. I think in the long term, we'll see another market top later in this year, and eventually that will be leading into a bear market after this fifth wave is completed. I do think we're in a topping process. Before you have market bottom or market tops, you have big topping process. You see some selling off, then one last push higher, and then you get into the bear market. So I do think we're in a topping process. I just want to cover the macro chart first before we get into the daily chart, just so you guys are aware on where my thoughts are overall and in the market. Now, on the daily time frame, what can we expect? We've been talking about the last couple of weeks, this inverse head and shoulder we had seen. And for me personally now, this inverse head and shoulder seems less and less likely. We talked about this inverse head and shoulder and then break up to the upside to the mid 500 to 520 mark. I think that is less likely now. We're in this strong area of support here that's been a support multiple times, January. Then we go here in October and down here in July as well. So we're in a strong area of support. We should see some kind of a bounce. If you don't see a bounce, that could be really bad for the S&P 500. So I'm hoping to see a bounce. But now this selling off to me here seems a little bit too extreme for me to assume that we're going to see, for this hemisphere shoulder set up. I do think now our overall goal might be this gap down here at 400, or at the very least retest this 418 level. This 418 level will be major to retest, because it was this breakout here on this small falling wedge here pattern. So that would be my first target, and it'll also be a strong area of support, as we saw this being a really strong support earlier this year. But I think overall we could see easily 400 potentially coming soon. So still feeling quite bearish. I do expect a bit of a rebound, probably to around this 435 range here. But, there might be even best case scenario. We might not even be able to get out of this box and, kind of head straight down. But I do think we'll see some sort of bounce, I would hope. We're down on the pre-market, the aftermarket on Friday, and then we're heading lower. Overall, feeling still bearish. We also had talked about this area here if we zoom in our MAs, this MA 100, MA 200 here, being a strong area of rejection for the S&P 500. And what happened? S&P 500 pushed up, got rejected really strongly, and coming down. Also, we could see, talking about this for a while, we've been eyeing this for a while, this death cross possibly approaching very soon with MA 100 crossing below the 200, which, if we get a couple more red days in this next week, we don't have a green week, you'll probably be crossing below and crossing that death cross, which is just really terrible news. But, we're aware you can make money going up and going down. Don't keep buying the dips. I've been telling you guys to stop buying the dips, around up here or something, maybe even a little higher, but pretty near the all-time highs. I was telling you guys, stop buying the dips early February, mid-January. So, I tried to warn you guys. Now, let's go to the triple Q. If the S&P 500 looks weak, triple Q looks much weaker. I mean, just complete, rejecting super hard, getting really close to these lows here at 317. This pretty much lows from a couple months ago, so really close to that. Same thing with S&P 500. I do expect us to have a potential, a little bit of a push higher before we see lower here, just for to have the bears defend a little bit this territory, right? We do have a little bit of a gap here that eventually will get filled around 349, 350. And we also have another one here at 357. So those we'll have to keep an eye on. Now we're getting some pretty big separation between the 50 MA, which is our slower MA. So we could see that approaching and getting closer as well. Death cross here completed with 100 and the 200. I just don't see how the Nasdaq doesn't make a new lower low. Now I am open to the idea, both the Nasdaq and S&P 500, of making a higher low. I'm open to the idea. I wouldn't mind it. I just don't see that happening. The more likely scenario is probably a new low somewhere around the 310 region for the triple Q in the coming week, 1 to 2 weeks. That's the more likely scenario to me. I don't think we'll have a higher low. We have all the way up to 319 down here to make a higher low. I just don't see that happening. Now the RWM, another one that we had talked about last week, shorted up here. It came up to almost retest this area. It didn't. Now it's getting this strong, it's getting really near the strong support zone here. If we zoom in, this 190 area here, which might not be a bad idea to take a long position. I know the IWM looks bad. Doesn't look great technically, but we could see a bit of a rebound as we've been it's been holding strong, and we know the IWM loves to trade in those ranges. So if we're in the zone, it wouldn't be a bad idea to enter a long position, so a stop loss right below it. And if it does fall below it, you can always take a short position as well. But the risk reward would make sense, with a push to at least 200 and potentially 206. So I'll definitely be keeping my eye on both of those. Another thing I would like to talk about is the 10-year yield. So here we have the 10-year yield, and it's something we've been talking about for a while. The 10-year yield, we don't like, the stock market doesn't like, especially the growth stocks don't like when the 10-year yield goes up and goes up rapidly, which we have. It's been going up really, really high after had this inverse head and shoulder breakout, and we thought we get some kind of rejection on this trend line here, but it's just been breaking above it. This trend line's being downtrend since the 80s, right, guys? So this is in the 80s, and what happened was in the 80s we had a really high inflation, similar to what's going on now. We recently had a breakout above those levels and hitting the 3% level, which is just extraordinary from the 10-year yields. If we zoom in more in and we actually look on the weekly time frame, we see that we did see a little bit of rejection here on the this trend line here, but then we just pushed below it. Also, we did see some rejection at 3%. What are we expecting for the yield? Will probably be a push to retest this breakout level and then go higher, which could help a lot of these growth stocks that have been beaten down really, really badly. So definitely looking at the yield. If we take a look at the VIX, the volatility S&P 500 index, well, let's go to our daily time frame. Still in this uptrend, and we saw, we've been talking about this for a while. We were aware of it. We saw that it just wouldn't give up this bottom trend line here, so still being in a higher trend line, and we saw this massive spike here on Friday, which most likely is gonna send the VIX higher. I just do not see it maybe testing this 40s here. Right now it's got a resistance around the 30 level, so you'll have to get above that. But if this stays in this uptrend, could keep being bad for markets. Did not give up this. It didn't make it lower low here compared to here, but still is in an overall uptrend, which is not good. If you want to trade safely in the stock market, you don't want this high volatility to attack you. Now let's take a look at gold. Everything was pretty much down on Friday, even gold. Gold, another play we've been talking about. It recently broke out of our triangle. Close that there. Broke out this triangle and did push higher. We were looking for overall target of 188 and then potentially this 195 level. Had a nice little push, but just couldn't complete it. And that's coming down to retest. A little bit is 180 level. Still looking bullish as long as we hold, I believe, above these 180s right here, 177 to 179, 180. Would really like it to hold the 50 MA. Right now it's closed up on it. It has fun support on it, previously, and we just love to keep this uptrend strong with this 50 MA, which this could cause the bounce that we're looking for, maybe a little bit of a retest of those breakout levels that we had not too long ago. So if this pushes higher, we'll definitely add more to our positions. Sitting with silver, had a nice breakout. We had a good trade on silver, but it's been selling off ever since. When you're trading silver, you're trading gold. One of my favorite stocks to trade is XME, which has been on a massive uptrend. Now seems to be retesting this 57, 58 levels at this 50 MA. So we'll have to see how that reacts to the market. So just a lot of interesting stuff going on into the market. If we go to energy, had pretty much a little bit of a bull trap here, and now looks like to be reversing by looking for some support around this 50 MA. A lot of these sectors have been strong, have been pretty weak actually this last couple of days as well. There's been not really any strong sector. Usually you have a stronger sectors than others, but we go to pretty much all the sectors. You see red day on it this last couple of days. So there's a lot of fear in the market. But I think for the S&P 500, I still gonna stand by the belief that I think we'll see bottoming around the next Fed meeting in early May. So right now there's a 75% chance of 6 to 8 rate hikes. If we get anything less than 6 or 8, or, between 6 to 8, if we get anything less, being 5 or less, will be very bullish. If we get anything above it, will be very bearish. Everything in the middle, I think will still be good news because it's what is expected and being neutral. I do think that on bad news, the market likes to bottom on bad news, and the market likes to top on good news. Same thing with crypto. We saw Bitcoin top when the Coinbase, came out. When Coinbase came out. So, sometimes I still think that we will probably see our market bottom, just like how we predicted this market bottom down here around that Fed meeting. I think we'll see something very bullish, something very similar. We'll probably see reversal near those near that meeting, because fundamentally, whatever the bad news that the market was expecting will be past it, unless we get some kind of crazy high rate hikes, which could happen, but I just do not see that happening right now. I do think that will probably bottom out, make the next push to around the 500 marks, and then eventually lead into recession later this year, early into 2023. That is what I think is probably going to be happening. I still think that next week will probably be a choppy week. It'll be hard, I think the bulls will try to put up a fight. I think overall the bears are going to end up winning in the next, most likely creating a lower low down here. So overall feeling bearish, just like I've been feeling bearish pretty much this last couple of months, minus, we're expecting a bottom down here like we mentioned before. So that's what I'm thinking right now. Let me know in the comments below, what are your moves for next week? What have you charted? What have you been thinking about trading? I'll make sure to look at the chart and maybe give you a reply. And if you want to trade with me live every single day, make sure you hit the links down below. And as always, peace.